Well, welcome everybody. Welcome to your daily five for March 28th, 2023. I'm Leslie Jouflas, and Trading Live Online is my website. Here, if you like the analysis I do, some of the patterns I show, this book, Trade What You See, How to Profit from Pattern Recognition, is now in 6 languages. And our other book is Essentials of Trading. It's not what you think, it's how you think. This one, however, is not in print any longer, but if you'd like a copy, just email me and I'll be happy to send you a PDF of that. So today what I'm going to be talking about is the S&P 500 in particular. This doesn't leave out the other indexes for a big move, but I'm seeing clearly on some of the S&P charts that a bigger move is definitely brewing. So let's take a look at some of the charts. We're going to look at a variety of time frames today. We're going to start with a large monthly, and we're going to work our way down to intraday charts. So this chart from StockCharts.com, this is a monthly chart, and I'm just showing the SPX, the cash market on this particular chart. We're also going to look at the futures chart. So there might be a difference in the prices that you see, and that's why between the cash and the futures. So if we take a look at this monthly chart, I think this is really interesting. So actually, we're in March, we're not closed yet, so we're not quite sure where this bar is going to end up. We still have a couple more days of trading, but so far this is a doji candle. It's not, I don't know if it's going to end up being a high wave candle. I think we would need a little bit more on the wick to the upside, maybe a little bit, but regardless, this candle, if it closes somewhere in this area, is telling us that there is indecision in the market. And if we look back, we look at March and February and January, December, November, even if we look back into October, September, August, July, June, and even into May of last year, we really have somewhat of a very large range, particularly this section here. So if we take a look, we can see where, look up here, where the have a close, open, a close, and an open. We have a high in that area. Back back in here, we had the opens and the closes and the opens and around the same area. And you see where this center line is here, right about the center of where I've got the highs and some of these lows here that I see have traded several times around this price level. And so the market is really winding down into a range of price level, and our intraday charts are going to help us identify some of those smaller time frame price levels. So let's keep moving down. So here we have a weekly chart of the S&P 500. This is the E-Mini. This is a futures chart, as I mentioned. This is the weekly. So this trend line, the dashed line here from the highs of early January 2022 and just extending that down. So keeping in mind that price levels that we just looked at on our monthly chart, and we can see the big swings that have been occurring. So we went all the way back to May. So we're down about in this area here where the market started doing these big swings up and down and up and down and up and down and up and down. I hope everybody has their Dramamine ready. And so we're in a very large range. That is going to resolve either to the upside or to the downside. So when we're dealing with ranges, long ranges, it's not always in my arsenal to predict a day and a time that is going to break out. There are some great technicians that work with cycles, and they can pinpoint that much better than I can. I watch the price levels and the range levels. So here we can see where this blue line is. We can see on the weekly chart the last few weeks, the highs right around this price level, just about 4,050-ish, 4,100 level. Up here is going to be the 4,200 level to watch, but we can see, look at this, the weekly 1, 2, 3, 4, 5, 6 weeks have really been trading up and around that particular price level. So we can see the price has so far been holding this trend line. And this dash line here of some support is also just bringing in some of the price clustering around the 30, above 38, 3,900 level. So right in here, we want to be watching these highs here and these lows here. So let's take a quick look at the RSI. So the RSI within this period has been staying below where this dashed line is. So if there is a break to the upside, it'd have to have a good clean break, closes above this resistance area. You'd want to see the RSI rising above that area. If the market breaks to the downside, then we'll want to be looking for the RSI to confirm that move as well. Now we're looking at an SPX again. This is again from StockCharts, and we can see now the trend line coming down. Here we can see how the price has, been moving up and down around that trend line, but here it's closed right at that trend line support. So again, a move, this makes it a little bit easier to determine where the levels are. The first level is going to be this 4,000 area and these highs here and here. If this breaks to the upside, this, of course, up here, for the market to move higher, it needs to break that resistance. But if it goes to the upside, this is looking a bit like an inverse head and shoulder pattern, left shoulder, the head, and the right shoulder here. Of course, that can change, and these patterns are not validated until there's a breakout of the neckline. But this is right now appearing to be an inverse head and shoulder. But again, that has to be validated with a breakout. And notice the lows on this chart where I've got this horizontal trend line drawn in, how that's coming all the way back to December. Look at all the trading that took place in that price range. And over here it was tested again this month in March, and so far has been holding. I think this is going to be an important support area around that 3850 level to be keeping an eye on. And again, that's the cash level. So you can just find this same price pattern on a futures chart or on the SPY and take the numbers from those markets if that's what you trade. This chart, scaling down a bit more to a 60-minute chart, what I wanted to show you on this chart is last week there was the FOMC announcement, and the market had a spike move to the upside. And you can see right here where this horizontal trend line is, the market just hit that and had total price rejection off of that level and traded down very heavily that day on the downside. But we can see here how often that price level has been tested. It was support back here in this section in February, and that support broke. And it's been tested here and tested back here. If we go back in time even further, we can see this price level back here also coming into play. So because the FOMC high, that spike high was here, this is an important resistance area. And again, we can see that kind of inverse head and shoulder formation on here. And I think we can use this trend line with a decisive break above that 4073-ish area as our neckline on that pattern. However, if the market declines from here, of course, we'll have an invalid pattern. So to the upside, we want to be watching that. The downside, this is the first area here, 39.37.5, and of course, this 38.40 level. When markets are forming ranges and large ranges like we just looked at on our monthly chart and scaling down to weekly and daily and intraday charts, they tend to form ranges and coils within the larger range. And I think that is what's happening now. And so I believe that there is a breakout in one direction or another coming fairly soon. Again, the day and time I can't give you, but we have these price levels to monitor. So taking a look now at a 5-minute chart of the S&P 500 futures, here's the FOMC high, and you can see where this low was here. The next day, the market attempted to trade up and failed, came down below those lows and now back up. So we have again a smaller range within that larger range. So let's take a look at so before we go away from this chart, again, that 40.73.5 on the futures, and the low of the FOMC day was 39.66 1/4. Although that's been traded through, the next day we can see, I think that's still an important support level because the price came down and managed to come back up again and hold support. So at this point, if the market comes back down through that level, I think it's going to take people by surprise. So I'm still keeping this price level on my watch list, and then also these lows right here, just about 39. That was 39.37.5, I think. Now, this is the 5-minute chart of using the Dow Jones Industrials, the futures mini chart, the YM contract on the 5-minute, and then the NASDAQ on a 5-minute as well. We can see the similarities and the differences from that FOMC day. So we can see where the high, I put the prices in, the high and the low for the Dow Mini and the high and the low for the NASDAQ. Now notice how the NASDAQ did not exceed that low, and the NASDAQ has been the stronger index this year. So this is the range to watch in the NASDAQ, and same thing as with the S&P 500 futures, same thing on the Dow Mini, the highs here and these lows here. Markets will have the strongest moves when all of these indexes are in sync, when they're all in gear together. So for any breakouts occurring from any of these price levels, you're going to want to make sure that you're keeping an eye on all of the indexes to make sure they're all going the same direction. If you get an index divergence, then you may have a false breakout. So these are the levels that I'm going to be watching. There appears to be a bigger move coming soon in the S&P 500 and most likely in the NASDAQ and Dow Jones Industrial as well. Thanks for joining me today. I appreciate everybody watching and your daily 5. And I do look for comments and try to answer questions when I see them. So please feel free to leave a comment or a question for me, and I'll do my best to answer. Have a great trading week, everybody.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.